The markets have been super tough, super tough. Probably the toughest market to trade I've ever seen in my 37 years. But I have one really killer strategy that I'm going to walk you through today, step by step, and it's unbelievable. It's been working great in this market, and it works great in the bull market. But even when this market's getting tore up, this strategy is still producing, which I'm very thankful for. So I want to thank you for joining me this morning. I really appreciate you taking time out of your day, but please no multitasking. So turn off any other programs you have running on your computer. And I'm going to really share with you something incredible. I'm going to pull the curtains back and show you the whole thing, and nothing will be left out. And this is a Wall Street technique that helped me crush it in 2021. A 268% annual return. We won on 51 out of 52 trades. And that's what we had. We had one loser. We had a 5.2% average return, and every one of these was a 3-day hold. But that was 2021, right? And 2022 has been one of the toughest I've ever seen in my life. Normally, you buy these dips. This is not one of those. This is one that just tore everybody up. Margin calls, huge losses, the whole 9 yards. And nobody really expected it to keep going down. But that's what happened. So it's a tough environment. And that's saying a lot, me being in this market since 1984. So I've worked with a lot of Wall Street traders, and I've worked a lot on Wall Street, running over $1 billion through the markets. And I've pretty much seen it all in my career. I was on the trading desk as a NASDAQ market maker in the 1987 crash. I saw the tech bubble burst. That was unbelievable. The Great Recession of '08 stretching into '09, the COVID crash, which was really unbelievable, and the broad market, which is considerably bearish right now in 2022. It's been nearly impossible for most folks to trade this consistently. We've seen very little follow through on stock direction. One day it's up, next day it's down. The volatility is as high as I've ever seen. And while the markets have been tanking, this strategy that I'm going to show you so far this year has produced 15 winners out of 16 trades. So 72.5% return so far in 2022. This is how it looks. We had one break even. And what's cool about this is you can, even when you lose, if you do lose, which is rare, as you know, you can keep the loss real small, break even for the better part of that. So I'm going to pull back everything, all the curtains, show you exactly how it works and how you could start this too. You could start implementing this strategy today too, right? So I'm preparing for a drawn out time of volatility and even more downside. This is the kind of market coming up that wears people out, or it tears people out. When they get the downside, they just want to throw in the towel. And the volatility is what ruins them, because you get an up day and you think there's some hope, and then the next day or later that day, it's all down. So that's what I think is going to happen. We're going to have a period of drawn out volatility and a really tough time getting back into a bull market. And there's a ton of panic and a ton of uncertainty. So what I want to do today is teach you how uncertainty actually creates opportunity if you know what you're looking for. So Wall Street's elite traders know how to play every single market. And I know because I worked among them for years. A little bit about me. My name is Jack Carter. I've got over 35 years and $1 billion in trading experience. I was trained at the World Trade Center in 1984 with Dean Witter. I'm known as a top trader and elite consultant. I'm also a former NASDAQ market maker, former hedge fund trader, and I've traded for myself. And today I'll be revealing where I see the markets going over the next few months, the good, the bad, and the ugly, why most traders fail in a bear market, and you're the victim of a Wall Street trap you aren't even aware of. A little known brokerage technique that lets you tap into the same loophole Wall Street uses against you, and 4 ways we win markets like these with the same technique that's helped me average a 5.2% weekly return on average in good, bad, and ugly markets. And of course, I'm going to make time to answer all your questions as I can at the end of this. So let's dive right into this. Please get a pen and paper, because I'm going to do it just step by step for you. So if you've had a hard time making money in 2022, or you've seen your brokerage account take a bath over the last few months, don't blame yourself. Wall Street has a lot of folks completely fooled. And most traders I know believe the only way to win at trading is to pick the right direction. And that's just that simple, up or down. That's what they think. And that's the lie that Wall Street wants you to believe, that you have to be right about market direction. So as a former market maker, I know the game Wall Street plays, and I know how they capitalize on your uncertainty. The fact of the matter is, when uncertainty arises, Wall Street milks hardworking people like you and me by changing the game. And this is what happened. And they get paid by your own fear. So by tapping into the same exact loophole, I was able to signal an incredible 268% return in 2021. And we're off to a great start in 2022 while the markets have been tanking. Again, 72.5% after just 16 trades. And I have to remind you, the markets are uncertain and no returns are guaranteed, right? Nothing about this is guaranteed. Everything we do in the market involves risk. And this strategy isn't guaranteed to continue forever. But since it served me well throughout my career, I don't feel like I'd be doing my duty not to share it with you. So if you're tired of wondering how your financial planner is losing money faster than the S&P, or if you're worn out trying out to figure out which way the market's going to go next, and you're really wanting to grow your trading knowledge and you're ready to take your finances into your own hands, then take notes, because this is going to be the most important webinar you've ever been on. You see, in markets like these, the experts know something most mainstream traders don't know. Now, I'm going to share with you what I think is the golden rule of being a multi-dimensional trader. And that means being able to do more than just one thing as a trader. So in other words, if you want to be a trader who can withstand and profit in all market conditions, you need to know this golden rule I'm going to share with you. Now, if you've been with me any length of time, you know I'm always harping on stock selection. That's always important. But in confused markets like what we have right now, strategy selection is even more important than stock selection. In other words, what strategy are you going to apply to the stock market right now? That's the most important thing. The stock in this case is going to come second, even though that's a critical part of it. Strategy selection in this market is what it's all about. That's why this strategy I'm going to teach you today is so important. So thankfully, despite what the fear mongers and talking heads on TV would have you believe, there are strategies just for these kinds of markets, because when fear is running rampant, it has a direct impact on options pricing. And I want to talk about that. And that's our edge, but it's not really what most people think. You see, when fear and volatility spike, options prices get very, very expensive. So if you buy options right now, your chances of winning have just been slashed. See, Wall Street knows this, and it's flipped their game, selling overpriced options to you, selling overpriced options to anyone that's an option buyer. And here's why that is. It has to do with the risk reward value set up by the options makers. See, in normal markets, stocks trend. So Wall Street can price options cheap since they have a good idea where the stock will end up through that trend. But in volatile markets where stocks whipsaw daily, even Wall Street can become clueless on where the stock is going to end up by expiration. So in order to hedge themselves from the little guy making the massive profits on the big swings, they simply jack up the price of the options through the roof to lessen their own risk, bringing in way more money as the seller of the options and cutting down on your odds of winning way down when you're the option buyer. So let's just have a quick recap here. In normal markets, which we're not in, we've got stocks in trends. Options are less expensive, and it's easier to win as a buyer of options. In volatile markets like we have right now, stocks are unpredictable, options are overpriced, and it's extremely hard to win as a buyer of options, really hard. But right now, there's a huge opportunity, even all that bad news. And here's why. When something is overpriced, you don't typically want to be a buyer of it. You want to be a seller of it. And that plays right into the hands of my absolute favorite strategy. Now, a lot of people I know have no clue, but you can actually use any regular brokerage account to tap into this exact same edge Wall Street traders use against most traders. So now let me walk you through exactly how the strategy works step by step. And when I say step by step, I really mean just step by step. What you're about to see is the framework of how I've built a 98% win rate since 2021, something no one anywhere could ever do simply by picking stocks going up or down, especially in a market like this. Now, one thing I take pride in over my career is that while many other professionals are bull market geniuses, I've always thrived in times of extreme volatility. And it makes perfect sense because for over 20 years, I've been beating the drum about the benefits of being an options seller rather than being an options buyer. Write that down. I want to be an options seller. You should write that down, because not only do sellers have a built-in advantage over buyers, over 76% win advantage according to the CBOE, but sellers also generate premiums up front. And this has got to be the best thing in the world. When you sell an option, you get paid that premium instantly. You get paid to make a promise. You get paid that premium up front, which is amazing. So when you're the seller, whether you're right or wrong about the position, you get an upfront premium every single time. That hits your account immediately. And beyond that, once you understand how to sell options and target fat premiums, you can combine it with buying options and stocks to create phenomenal trade scenarios. Now, let me pause here to give you a few examples of this. Remember February, the market was all over the place because Russia's invasion into Ukraine. In a word, volatility. Here's what that looked like. Russia invades, the market's going down, it goes down even more, it tries to recover, can't recover. So many traders would run from a market like that, but not us. With our system, we were confident we could sell Amazon options and collect a premium, and we did, claiming 5% in just 3 days. And a few weeks later, we're at it again. The market had the Europe inflation and looming CPI numbers on their mind, and it got real soft and almost had a collapse right there. But we didn't run from a fight. We jumped in on another bearish call on Amazon and claimed 8% in just 3 days. So this has been true all year and even beyond. And last year in early October, when everyone was freaking out about another possible government shutdown, here's what the market did again. It dropped, and it dropped hard. And yet our strategy held true, another 5% winner in just 3 days. These are all 3 days, okay? Now, I just showed you 3 winners, 5%, 8%, and another 5% in 3 days each. So if you're looking at those results and you're thinking, man, this is boring, then you should go ahead and exit now and go back to gambling with your account, because I'm going to show you something really consistent that piles up. Because the fact of the matter is, by sticking to the method and stacking these small yet meaningful weekly profits, my signals have posted 0 losses in 2022 with 1 break even on 16 trades. And while most folks were watching their 401 and their IRAs bleed out, could that run of success stop? Of course, trading always has risks. But what other system have you ever seen perform like that as the market tanks? That's the main thing. So which would you prefer? A 72.5% net portfolio return or a minus 18% loss? Now, I know the answer is obvious. And what we're doing here isn't some giant mystery or some insider secret. In honesty, all you're doing with this strategy is playing Wall Street's own game. The same way they make the rich even richer, even in bear markets. So options are meant to help Wall Street be greedy and protected. They're designed to set up extremely advantageous trade scenarios for the expert. See, back then, they probably never realized retail traders, or the little guy, would ever get into options or get these powerful tools and be able to learn these strategies. But that's what my whole career is about. And it's why you often hear me say options are the biggest advantage for the little guy since the invention of the internet, specifically weekly options. And as far as I know, I was the first Wall Street guy ever to unveil a complete premium focused service to retail traders. And I got a lot of flack from some of the elites, but I didn't care about it. I was determined to share this stuff, and I knew you needed to hear it. This information is not a luxury. It's critical, because once you see just how powerful these setups are, you're likely to never go back to trading ordinary stocks and options again. This might be all you do. So let me be honest. I've always been a pretty good stock picker, but I could have never built a 98% win rate since 2021 in these crazy markets, just picking stocks. I'm so thankful for the options market. You have no idea, because without it, it would be very, very tough. So in my opinion, only, and I mean only, by using a premium focused non-directional approach is it possible to have that type of consistency and win rate. So you want a premium focused strategy, non-directional. Doesn't mean if the market goes up, down, or sideways. You want to be able to bring that premium in. And that's the kind of strategy is even better when the market is volatile, because higher volatility means overpriced options. So I mean it when I say it's no surprise that I've had such success in volatile markets. This strategy is tailor-made for market conditions like these. So let me give you one more example. Back in January, investors were so worried about inflation and bad bond markets, and even record earnings reports could not stop the bear train. The market dumped for an entire week. January 17th was MLK Day, so only 4 days, but it was bad going down. And in all this mess, I calmly recommended a trade on SHOP and collected 4% in just 3 days. Now, these aren't eye-popping returns that other traders often brag and lie about. This is the real stuff. These are real returns in real markets. A lot of people do these trades with me, and it's the same returns that have had a 98 plus success rate in 2021. And over time, those steady, consistent returns have beat every high roller out there. And they always get beat in a bear market, but not with this. So with all that said, now I'd like to do a deep dive into my number one strategy for collecting premiums. Does that sound good? Is everybody ready to get to it? That's good. Good. Okay. So I call these weekly options profits. And you may have heard me talk about weekly options before. When you're trading a strategy this good for this long, you're not exactly quiet about it. I love to share this, and I want to give a complete reveal on how this trade setup works. And I even have a way for you to join me in my very next trade, so make sure you stay tuned. Now, before I do this deep dive, grab a pen and paper and jot this down. There's 6 reasons that I love this strategy, and you need to know these before we get into the actual setup, right? The first thing I love is you collect premiums no matter what. There's nothing better than a trade that guarantees you a premium that you keep, even if the trade goes against you. And right now, premiums are sky high. So I love collecting options premiums. It requires limited capital. This is a great thing right now. The way we set up these trades, you can trade any stock, any price stock. Even Amazon's at 3,000 a share. It doesn't matter, because the only thing that matters is the difference in strike prices. So if it's a $5 difference in strike prices, you can do one contract for $500, regardless of the price of the stock. That's a huge advantage. The third thing I love about it is there's multiple ways to win. Now, unlike stock picking, where only one specific outcome is the result of the trade, this has the ability to maintain a profit whether the trade goes up, down, or sideways. That's the thing I really love. Now, let me be clear. I'm not saying every trade is always a profit. I would never guarantee returns in any market, but these premiums accompany every trade. And we do have a lot of flexibility to stay ahead in our accounts as long as the market stays within our expected range. So I hated waking up at 4 a.m. doing all the pre-market research and scouring the markets for hours to jump on a stock at the right time. Now, this trade that I'm doing, it gives me all day Monday. It gives me all day Tuesday and even into Wednesday to get in. And it's always over on Friday, right? My prime time is getting in on Tuesday for a trade that's going to expire that following Friday. And the fifth thing is the risk to reward is built in up front. So when I make this trade, I know exactly what my premium is going to be as well as my risk. I know exactly when it's going to expire, and I have an exit plan in case I need to get out ahead of time. So every part of the trade is known in advance. So if you're here today, you probably know that compounding is the number one key to wealth. And I love that this trade is one that I can scale and compound aggressively over time. Now, are you seeing why this one strategy is the hallmark of my entire 30 plus years in the market? Now let's dive into how this works. Remember, Our goal is to collect premium up front. And that's always collected and only collected by selling an option. Right now, when you enter a trade, you don't have to buy to open a trade. You can sell to open a trade. And that's what we're doing here. We sell to open on an option. Now, this premium is applied to your account instantly, regardless of what happens on the rest of the trade. So option sellers have an almost unbelievable advantage in the market because of how many times options buyers lose, which is most of the time. And the main reason is pretty simple. An option has an expiration date, which means it's on a deadline to perform the way the buyer wants it to perform, or else it's going to become utterly worthless. And a worthless option, in short, means that the seller of the option wins. So options buyers, they want a stock to go up, like ABC. They want it to go up $5 in price by June 17th so they can hit it big. And that's how most people are buying options. But check this out. If ABC goes down, the option seller wins. If ABC goes sideways, the option seller wins. If ABC only goes up a little, the option seller wins. And if ABC skyrockets after June 17th, the seller still wins. So look at all these advantages the seller has. The buyer has no advantage. If it doesn't go up, he's going to be out most or all of his money. And that's why this built-in advantage of the seller I talked about is so significant. Just this one thing can change everything for you. Now, let's take a look at this example on Amazon in early April. The stock started higher and then it dumped the rest of the week. It was a really ugly chart. This was just a massive fall, right? And I didn't care because that's exactly what this strategy was built for. Believe it or not, that's how this works. Amazon can drop and you can still profit. So we jumped in on Tuesday. We were out on Friday with a clean 5.4% profit in the process, just 3 days. So like I say, sellers have a huge advantage because there's so many scenarios where they win and so few where they lose. In fact, if all you did was go around and sell options, every option you could get your hands on, I'd imagine you'd do pretty well. But there's just one big problem with that, big problem. The problem is just selling the option requires a massive amount of capital. And you have to be prepared to buy the stock back if you end up in a scenario where you don't win. That's the bad side of it. So for most investors, the capital required and a more open-ended risk profile is a huge obstacle to selling the options outright. It's the capital requirement is just too much. So most investors never end up collecting any of the sweet premium I've lived my life enjoying. But the strategy we're talking about today is a twist on selling options so that you don't need a massive stake to start trading. And this strategy creates other advantages completely foreign to a naked put, for example. So here's how it works. This is the principles and the concepts you need to grasp. What we're doing here is we're going to sell an option to collect a premium. And at the same time, we're going to buy a less expensive option on the same stock. And you can do this all on one ticket through your broker with just a limit on the net credit that you want. So selling the option gives us our premium, and that's the payment we get just for getting into the transaction, no matter what happens, right? So buying the cheaper option, it does several things for us. First, it hedges the trade. Second, it makes the trade much cheaper because the capital requirement now is just the difference between strike prices, right? So it's way, way, way cheaper. And it offers a safety net that a naked position does not have. That's that hedge. So if you're new to investing or just new to using options, this can be a lot to take in. So let me summarize what we're doing here because it's really not that complicated. Buying a cheaper option is like taking out an insurance policy against our own bet. We're protecting ourselves in both directions and keeping an immediate premium in the process. Now, I'll give you a real specific example. This is a trade that just expired yesterday. And I want you to understand fully how this works. So I got into this on last Tuesday, and yesterday the options expired, so the whole thing was over. But first, we need to talk about one more advantage that I've built into this trade. This is a huge, huge, huge thing that I just can't blow past, and that is the concept of direction. Now, earlier I mentioned that sellers have an advantage because the stock can actually go up, down, or stay sideways and still give the option seller an opportunity to win. This is true and it's very important. However, we can magnify our advantage by being on the right side of the market. Okay. So think about it this way. The only way a seller loses is when the stock makes a significant move in a real short period of time in a specific direction. In other words, if we have a long trade here, the stock can go up a little bit. It can skyrocket upward. It can stay the same. It could go down a little. And all of these scenarios reward us when we have a long bias. Now, the only way a seller loses is if the stock goes down a lot in a very short period of time. So to help protect against that scenario, we want to trade with the broad markets trend. So what that means is this is a market-driven strategy. Unlike every other strategy where you're just trying to shove one strategy into the market regardless of market conditions, with this strategy, we need to plan it with the same direction as the broad market, which is great because most traders can only trade when the market's going up. This frees you up to be able to trade when the market's going up, down, or sideways. But the main thing you got to remember here is we're trading with the broad market, same direction of the broad market. That way the stock is even less likely to make the one move that it can't make. So let me show you what I mean just by using a simple chart. If we have this trade set up, we don't want to set the trade up in front of the market dropping. We'd lose, right? If the stock can't go here and the trend is down, we'd lose. If the stock can't go here and the trend is up, the odds are it's not going to go down and hit that zone. So that's why we want to be in this kind of a position. By trading with markets momentum, we protect ourselves against that one scenario we want to avoid, so we come out as a winner. Now, the stock has to reverse against its own trend, which is difficult, and it has to reverse against the broad markets trend. That's even more difficult. Plus, it has to move significantly more than its average range in a really short period of time, right? So if you think that it already makes, like, we have the odds stacked in our favor, and the best part is it gives us less than 4 days to make that unlikely move. So every week I execute this trade on Tuesday, and every week the options expire on Friday. So since it's Derby season, think of it like placing a bet late in a horse race, right? Now tell me which horse you think is going to win this race. This is not like the real Derby race, but this is a great example. This guy, number 5, he's so far out in front of him. If you could put your bet in right now before the, everybody's got to place their bet before the race starts. What if you could go in and place the bet when this guy's like 50 yards from the finish line and you know he's going to win? So you collect a premium and it would be almost impossible for you to lose, even if it was a small premium. And you do it because your chance of winning is incredibly high. And that's kind of what I'm doing here. I'm giving the stock a big lead against where it can go, then giving it a very short period of time for when it can get there. And I'm going to get paid for doing it. Just like waiting until a horse has a big lead in the final turn, he's just about to cross the finish line, then you go place your bet on the winner, right? How cool is that? It's just one more way to stack the probabilities to our advantage. And that's why we've ended up as a winner over 98% of the time since 2021. Now, I'm going to show you a real life example in these powerful setups. And this is a trade that closed out for a win just yesterday. So the very first step, this is the step-by-step process. I want you to write this down because the steps are the same on every trade. And the very first thing you got to do is what I call putting your fingers on the pulse of the market. You got to plan this in the same direction as the broad market. So we've determined that the broad market is bearish. And how we do that is we want to look at the broad market SPY. That's a ticker symbol for an ETF that tracks the S&P 500. And by looking at this chart, it'll tell us what the broad market is doing. So here we see, just looking from left to right, that it's very bearish. You could use any kind of technical analysis you want. You could keep it simple or more complex, but what we're seeing here is a market going down. This was as of yesterday, the 13th. So we've got a bear market. Now we know we got a bear market, so what do we do next? So step 2 is you want to find a stock that has two things going for it. It's got volatility so that the options have premium, and it's got a directional bias. That directional bias would be in the same direction as the broad market. So you want to check the broad market. That's step one. Step two is find a stock that's more volatile than the broad market and trending in the same direction as the broad market. So I use my tools. I find a high premium, high volume stock with a line in the overall market direction. It's totally going the same way. So here's Amazon. And what's cool about this is, again, it doesn't matter what the stock price is. Most people give up on some of these great stock trades because they're just under the myth that they need a lot of money to trade Amazon and take advantage of Amazon, and you don't. Even when it's going down, you can make money on it. That's what we're doing here. So now we've put our fingers on the pulse of the market. We know it's going down. Step two, we find a stock that's going in the same direction as the broad market, but more volatile. Now, step three is we want to identify this no-go zone where Amazon is not likely to go in the next 3 days. And that's the range, that's the area we want to place our trade. So how we determine the no-go zone is with just simple technical analysis. You could use anything you have now. If you have an online broker, there's tons of charting capability. So use anything you can that'll give you an edge to find out where resistance is. That's what I'm looking at here. These are trend points. I use trend point software. And when a stock is below these trend points, then those trend points serve as points of resistance. And that's the no-go zone. So what that means is Amazon is trending down. It's not likely to get up into this zone. The odds of it reversing its own trend and going against the broad market trend, that's almost impossible, right? So we want to have our trade in this range where Amazon is not likely to get to in the next 3 months. So now we determine our no-go zone. Then we'd go to the options chain and find those strike prices in there where we could sell one option and buy a less expensive option and make a nice net credit. And that's step four. We're going to sell an expensive option and buy a cheaper option with a downside bias here. So what we did with Amazon is we sell the Amazon 2420 strike price call that expired yesterday. We did that on Tuesday. And at the exact same time, we have an order to buy the Amazon 2425 call. That's less expensive because it's slightly further out of the money. Remember, Amazon is below 2420. So the 2420 call, we're going to bring in more when we sell that than we spend buying the 2425. And what's cool about this is you can put this all on one ticket. So you have a limit on the net credit, and that means you don't have to worry about what price you got when you sold one option and what price you paid when you bought another option. If you put a limit on that net credit, you want to make 50 cents more selling one than you spend buying another one. You put a limit on there, and you're either going to get that net credit or that trade won't get executed. It's so super cool to be able to put this all on one ticket. Now, picture is worth 1,000 words. So I got a chart up here. This is Amazon, and you can see it was over 3,000 back here, but it's just going down and down and down and down and down. So we wait until Tuesday. See, this goes all the way back to April, but I'm just talking about Tuesday the 10th through the 13th. And this is so crazy, right? We sell the 2420 call and we buy the 2425 call. We make a net credit of 5% in 3 days. And when you do this trade and it gets executed, that net credit instantly hits your account. The other thing I want to show you here is when we put this trade on Tuesday, Amazon is down here like $2,200, and we sell the 2420 call. We're at like $220 out of the money, right? That's so wild that there's a market for these options that far out of the money. That's crazy. Now, that's not like it's the only good strike prices you could use. You could use one closer to the price of the stock and make way more than 5%. Or you could use strike prices even further out of the money and maybe make 3%. But the cool thing is you get to decide, use a sliding scale on these strike prices and say, hey, I want to get 15% in 3 days or whatever, 20%, you'd move it down. I think this is a real sweet spot just for me personally, but it's not the only good spread that's out there. So that's where we're at. We put that trade on. We're way above the price of the stock. We got a big cushion. Amazon would have to make a huge jump, right, for us to be in trouble on this trade. Now, I want to talk about this Tripwire, okay, because you want to have some protection. You always want to have an exit strategy. Anytime you enter a trade, you want to know how you're going to get out. So what I like to do is put a Tripwire in there. And what that's going to do is alert me to the fact that this stock is going in the wrong direction, right? If it goes up and it goes through both my strike prices, I'm going to lose all my money. So I want to have an early warning system. And that's why I call it a Tripwire. And I set that closer to the price of the stock than my actual trade, so that if the stock does hit this Tripwire price, I can unwind the whole trade and come out with a break even or maybe a slight net credit or maybe a tiny little loss. But that's going to give me the best opportunity to come out of a break even on a bad trade. That's why when you have a loss with this, it's not going to rip through your account. It's not going to tear your head off, right? When you use this Tripwire. And this Tripwire is just where you go into your brokerage firm and you set an alert so that you get the email from your broker, right? And you're going to get it. It probably won't go to spam. You'll see it. And then when it hits a Tripwire, you just go in and you sell to close the 24.25, right? And you buy to close the 24.20 call and you're out of the trade. Or you do nothing if it hit the Tripwire and you thought the stock was going to go back down. And then there's an advanced technique where you could stay long the short leg or the long leg if the stock keeps rising. We'll get into that at another point. But I just want to show you how great this looks, right? This is how we're able to make money on a falling stock. And we've done this every week. And Amazon's been falling for months. And I was joking around with a friend of mine. He's like, Jack, how do you make that much money on a stock that goes down if you're not shorting it? And I'm just using this strategy that I figured out and perfected. It runs like a Swiss watch. You know, this thing is just so accurate and such a great money maker. I love it. But like I say, you don't have to be on the sidelines waiting for a bull market. You could get right in here now and clean up. And selling these calls, man, it has just been great. They're so expensive, right? Like we talked about, everybody's bidding the price of calls up. So when we're on the sell side, you know, it's the place to be. That's why this thing works so good. And look, Tuesday to Friday, that's just such a short time to be in. And Monday's a terrible day to enter a trade. So you never want to enter it on Monday. You always want to go in on Tuesday. Plus, that takes 20% of the time out of the market. We shave off 20% market risk right there because we're not in the market every day. We're only in the market 3 days. So step 5 is to collect that premium. When those options expire, then it's all yours. That's how it looks. Amazon closed below 24.20. So we were fine. This whole 5% just settled. And then you got step 6 was just wait for them to expire outside the no-go zone. And they're going to be worthless. And that's what happened. Stocks down here. Our no-go zone is up here. So we got paid with no problems. Here's the yesterday looking at Amazon at 22.17. This is the 24.20 and the 24.20 strike price options chain off of Schwab. And this was before the end of the day, but they were already heading down to be worthless. Big, nice, big open interest there too. Way to go, guys. And then step 7 is enjoy the weekend. That's me out surf fishing. Still not very good at it, but I got 3 days to give it an attempt every week. So now let's step back and make sure you get the full picture here. Okay, right now the markets have gone insane. Your trades aren't winning. It's not your fault. Even the top experts can't pick stocks and trade straight up options in this market because it's a fool's errand. That's why I follow the golden rule. Remember, strategy selection over stock selection. And right now, because premiums are way overpriced, this is the best strategy for you. So you have the same power to sell options as these giant hedge funds on Wall Street. You just don't have the capital to make it work. But by introducing that one subtle change, buying that cheaper option while we sell a more expensive one, I've got a built-in insurance policy that even mainstream traders can use, like betting on the horse in the final stretch, right before the whole race is over. And with these tweaks, we've ended up as a winner, like I say, 98% of the time since 2021. And there's a good risk not every trade is going to work. There's no guarantee, even on a great strategy, that past performance is no guarantee of future performance. But I stand by this system, and I'm proud of what we accomplished, which is why today I'd like to open the doors to you. If you've seen what we've done here and you like what you see, you definitely want to jump on this. So I'd like to send you a series of in-depth training modules that go into every detail of the system so you can place these trades just like I would. So I want to invite you to unlock all of this in the weekly options profits system. This is everything that's in it, right? Let's take a closer look at what's involved here. And in a few minutes, I'll invite you to unlock permanent access to my members' online portal. So you're going to get lifetime access. It's password protected with no monthly membership fees. It holds all the material in an easy to access format. We keep this updated weekly, so you're always up to date. Then you can start to study the weekly options profits trader training modules. I've got all these 6 modules in here. We start off talking about how to pick stocks, because that's the most important part. Module 2 teaches you everything about options. Module 3 focuses on the first way to play options in these markets. Module 4 is what we talked about right here. This is the engine that pulls the train. Module 5 teaches you how to buy weekly puts or calls without using a hedge for those rare times that you'd want to do that. And Module 6 is a free bonus. It teaches you how to bulletproof yourself in volatile markets using weekly options. And my team will be here to guide you every step of the way. You get unlimited email support. That alone is priceless. And I know some folks want to have these tools in physical form. So I even give you a home study kit. And I do this because I know that if you take this home study kit to a quiet place in your home and you focus on it, you're going to get better results with the strategy. I believe that wholeheartedly. And I know we don't have to send it out. People are like, Jack, why do you send that out? Why don't you just let people download it? It's because I know that you'll get better results and I care about your success. Even though we don't know each other, I care about your success, which is why I send the home study kit. I know you'll get more out of it if you read that. And I got a few more bonuses. We got some really cool video training in here. We got some amazing case study videos. You're going to get my 3-day option strategy, right? You're going to get all of this in the members online portal and the home study kit. And it's a phenomenal suite of resources. I made it all myself, and I know you're going to love this. It's specifically designed for serious traders, the ones that are ready to take their finances into their own hands. You can do this, right? Those of you that are tired of watching their financial planner lose them money, you can do this. And for those that are ready to turn the tables on greedy Wall Street and the wealthy 1%, you can do this. So you're going to get the very best strategy I've ever found in markets like these. The meat and potatoes on everything you need to know to start picking weekly options trades for yourself. Now, there's no way I can possibly put a value on the 30 plus years of experience and expertise that I've loaded into these courses. To me, they're priceless, but I want to do everything I can to make this accessible for you today. That's what it's about. It's about you, because you need help in a market like this. Like I said earlier, this information, it's not a luxury. This is critical that you get this to be successful. So right now, I'm going to slash the price of the whole thing down to just $497, right? You get all this lifetime access to the member site, all this material, all the training, everything you need to know for $497, less than what you'd pay for an hour of time with a top Wall Street trader to help you grow your account. But I want you to have the complete confidence starting this training as soon as today. So we're giving you a killer deal on this. And let me just share some testimonials. As Craig says, he's impressed but not surprised at the performance. Not one loss, phenomenal. The record speaks for itself, and he looks forward to continued learning. Scott says, thank you big time. All the credit goes to Jack and his team. Actually, the credit goes to you, Scott, for going through the training. And Joel says, I want to thank you for making this information on your strategy available to us, the little guys. I've been researching trading options for income, and yours is not only the most comprehensive, but it also makes the most sense. So far, it's working for me. I appreciate the information. This could be a life changer for me and my family. That's what I'm after. That's the goal, to make this a life changer for you too, bringing in weekly income. Once you have that skill, you're unstoppable. And these guys have learned how to do it, and they've applied it to their own trading. And I'm very proud of them. And you can get the whole thing for $497. But today I want to go with an offer one step further for those of you that are really dying to get into this and get started today. I'm going to open the slots to the VIP level of the weekly options profit system. And what does that mean? Well, the VIP members, they get spoon-fed weekly options VIP picks for 12 months. Now, there's no guesswork on your part. We do all the hard work for you. We give you the exact cream of the crop trades each week. So what you get is an email. There's no text because the content in the trade alert is too long for a text. But what I'm going to do is give you the exact stock, the exact options strike prices, the exact expiration, the net credit you should get, and I'm going to give you the tripwire, and I'm going to give you 3 exit strategies with every alert. So you get everything, right? You get every single thing you need. You could copy and paste this trade, but I think you'd be way better off going through the training. But I'm telling you, it's so simple. When I give you the exact stock, the ticker, the strike prices, the expiration, how much you should get in net credit, and the tripwire, there's no guesswork on your part. So with a VIP membership, I'm going to send you the next trade on Tuesday. These always come out on Tuesday morning. I try to have it in your inbox by 10:30. I try to get going around 10 to 10:30 is kind of prime time. Eastern time, that is. I want to wait until the market opens a half hour on Tuesday, just so it can settle down a little bit. Then I pick the trade and I send it to you by email. And I'll send you one every Tuesday morning. I do these trades too. I'll send you one of these trades that we do, the VIP trade, every Tuesday for a year. Now, the membership site, you get into that, that's unlimited, right? You have lifetime access to that. This is for 1 year. We'll send you the trade every Tuesday, and I'll walk you through the exact steps to place the trade. And that's going to give you the best chance of success. So the weekly white glove trade alerts from a Wall Street veteran with 30 plus years trading and the creator of the system. And I'm not overstating it when I say that these alerts are nearly invaluable. I think they're priceless. And I've charged as much as $3,000 for these alerts in the past. And the Wall Street firms I've worked with in the past have had to pay a lot more than that. But as I already said, I'm not concerned about traders in this market. I'm willing to do just about anything to help you master this strategy, even if it means slicing the price of my most premium service in half. So you're going to get everything they got in the basic system. The entire system is the same. The only difference is the VIP guys and gals, they get every Tuesday, they get the VIP trade alert. And for all that, it's just $14.97, not $29.97, which is why I want you to jump on this today. And I want you to get the VIP system. That's what most people do. And most people are happier with that. So it's almost time to give you this link, but let me go over your options one more time. We've got option 1 is the premium training suite, lifetime access to the members online portal, weekly options profits trader training modules, the weekly options trader training video, the unlimited email support. That's priceless. You get the home study kit because I care about your success. You get the bonus video training and case studies and the 3-day option strategy. That's just $497 for lifetime access. We wanted to make it a no-brainer, and that's a complete no-brainer. So that's option 1. Option 2 is the VIP option. This is what most people get. It's everything in option 1 plus weekly options VIP picks for 1 month, right? And of course, you get the 3-day option strategy. That's a $3,440 bonus, right? Both options get that as well. And today, this is just $14.97. Again, we wanted to make it a no-brainer. So you want the white glove alerts. Most people want VIP access. So when you get this today, make sure you get the VIP. And I'm ready to welcome you inside the members online portal. And if you're ready to join me, you can get a username and password and jump in on this today And then Tuesday morning, you'll be all set up to get the trade alert from me. So we're online right now. Go to jackcartertrading.com/WOP. That's for weekly options profits. jackcarter.com/WOP, or call our concierge team at 904-416-1776. They'll answer all your questions and you can place your order with a real person. They know everything about this. They're educational directors, not customer service. So they're very familiar with the education, and they're very familiar with people that have been successful with this. And you call them up, you can ask them any question you want, have your credit card ready. They'll get you set up with a username and password. You could get into the whole thing today. And remember, you have lifetime access to the members portal. And for 1 year, you want those trade alerts, which you do, then you're going to want to get the VIP access for just $1,497. All right, let's look at the chat. I'm glad you guys are on here. I hope you enjoyed this presentation as much as I enjoyed making it for you. And now I want to go through your questions and encourage you to go ahead and get in on this. Yes. The question is, Jack, can the option seller win when the option expires? Yes, they expire worthless. If they're out of the money, you don't even have to close the trade out. Like the trade that expired yesterday, you don't have to do, you just do the one trade on Tuesday. And if they're out of the money on Friday at the close, you don't have to put in an order to close the trade out. They'll just expire worthless. And you'll look in your brokerage account and you'll just see they just journaled the trade off of your account. You keep all the money. So you win big time when the options expire worthless. Sam Carney asks, hello, lovable Jack, will there be a recording? I'm not sure. I think so. Okay, Dano asks a good question. He says he's tried this in the past and got burned from black swan events, overnight headlines. You win 8 or 9 out of 10, but the 1 or 2 losers wipe you out. And how do you prevent this? That's a great question, Dano. And I do this 6 different ways or more. One is I do it in the same direction as the broad market. That's going to prevent a lot of losses. Second, I'm finding a stock that's also trending in the same direction, but more volatile, right? Then the third thing is I'm way out of the money. I've determined that no-go zone, and that's where I place my trade. And then in addition to that, I've used that tripwire, right? So you can't get wiped out. If you get the tripwire and you unwind the trade, that's a great point to unwind the trade at the break-even price. So the only way you get wiped out is if you don't do anything to protect yourself, right? All right, hope that answers your question, Daniel. Yeah, Sam, I guess we're going to have a recording. So Dave Peterson asks a great question. How close do you put the tripwire? There's a little calculator inside the members area. I hate doing math. I flunked 9th grade math. So how close do you put the tripwire? You just type in the price of the stock, your net credit, and you hit enter, and it'll give you the tripwire for you. It'll calculate that for you. But that should always be a little bit closer to the price of the stock than your closest strike price. You always want that little heads up. You always want that little time when you can get out at the break even before it goes against you too much. Okay, Bev says, you were paid a premium when you sold it, so now how do you buy it back? Well, you'd go in, we put a limit on the net credit when we entered the trade. Now we'd put a limit on the net debit when we exit the trade. So when we buy it back, Bev, we're spending less than we got when we sold it. Yeah, go to jackcartertrading.com/WOP while you still can. Yep, every Tuesday morning. Okay, T, that's a good question. Is there a VIP premium service that gives more than one option recommendation per week? Well, here's the thing, T. We started this almost 10 years ago. And when we started, we gave people 3 picks every Tuesday. And after about a year of that, everybody's saying, hey, which is the best one of the three? And it wasn't like that, but the three was too much. So everybody just wanted one. Now, when you get that one, T, you got to remember that that's not the only good one that's out there. There's a lot more good spreads in that stock at different strike prices. There's a lot more stocks than just the one stock that I picked for that. So once you learn how to do this, T, and that's why I want you to go through the training part, not just get the trades from me, but learn how to do it, because then you'll be able to take off and apply this strategy on your own. And that's when you're really cooking, right? When you do that. So the thing is I don't want you to get this because the trades are so good. And I don't want you to get this because the win rate is so high. I know that sounds crazy, but the main reason you should get this is because you want to learn how to make weekly income. Because if you know how to make weekly income, you're totally unstoppable. You don't need a gigantic multi-million-dollar account to retire. You don't need anything. If you have that skill and that market is always out there for you, that's the most precious skill you can have. So the main reason I want you to get this today is because you want to learn how to make weekly income. That way you'll learn it. This will be much more satisfying for you. And hopefully all you'll do is this strategy. Yep, they're standing by. Jeffrey's here, 904-416-1776. Okay, Tim, that's a good question. Do you do puts in an uptrend? Yeah, that's exactly right. We're picking puts on a stock that's trending up. We're finding a no-go zone where the stock is probably not going to drop 2 and 3 days. So we're using puts in a bull market. Right now, we're using the bear call because market's real soft. But that's the best part, is that you don't have to sit out of the market. You're always in, where everybody else has to wait for the bull to come around. You can get in now. Yeah. Benedict says he can't emphasize enough to go through the training. Thank you for saying that, Benedict. Okay, Sunita, we'll check it out for you. Okay, Benedict, I don't look for implied volatility. I don't use options Greeks at all. I never have. I've never used the options Greeks one time in my life. Not even for covered calls, nothing. I think it kind of gets in the way. But if it's helping you, definitely do it. Just I don't like complicating it. All right, Tim signed up. That's a way to do it. I love it when you're in. Yeah, Jerry, we don't they all expire. They all expire on Friday. So if they're expired out of the money and we're a winner, we don't close out the trade manually. We don't do anything. Yeah, Robin asks a great question. She says, or he says, do you set a limit order for the net credit when you first get in? And if it isn't filled, do you chase it? I mean, accept less than, say, 50 cents if you want. Yeah, I don't chase it too much, but usually if I put that order in and it doesn't get filled, there's a reason why. It's either two reasons why. It's either too far out of the money, and there's not a way to get this trade filled for a 50-cent net credit, or a net credit of 50 cents isn't possible on a trade where you might be able to get 25 cents is 5% with a $5 spread. Some of these options have a spread between the strike prices of $2.50. Some of them have a difference in strike prices of $1. We did a trade on Visa where the difference in strike prices was 50 cents, right? That's pretty cool. I think, Andreas, I think you can extend the service. Yeah, again, I don't use implied volatility. Tim is finally in. All right, my man. Nancy asks a great question. Are all brokers equal at getting these filled? Pretty much. I like Schwab's platform. I just love it. You know, there's no commissions at most of these brokers, and you can just go in on an all-on-one ticket in Schwab, and set a limit on the net credit. You pick your two strike prices, right? You always have it set up for that Friday's expiration, and then you just put a limit on that net credit, and you put that trade in. And if there's room, you know, there's a bid and an ask and a spread between each individual bid and ask on each individual option. And if there's room to get 50 cents net credit, you'll probably get it. If there's not, then you won't. You know, one guy said, you know, I couldn't get filled on this trade, and I looked at the trade, and the strike prices he picked were so far out of the money, there was no bid. There was no way to sell one of them. You know, and he's asking me, why can't I get filled? Well, you have to do it with some options that have some premium. You can't go so far out that there is no value. But what's amazing is you can go so far out on Amazon and some of these stocks that it just amazes me. There's a market for those options out there, like you saw this week. You know, I'm selling them at 24.20, and the stock's at 2,200 or 2,000. You know, so there's a huge cushion you can create there. Okay, Mike asked to see the overall trend. What time frame do you use? That's a really good question. I like that 6 month chart. That to me, it gives you the best view. If you look at anything too long, it kind of gets too complicated. And if you look at anything too short, you don't get to see enough. You don't get enough information. So I like that 6 month chart. So Mary Alice asks a good question. And she says, you said to pick a stock that is volatile. What do you use to gauge volatility? I just eyeball it. You know, I look at where that stock is and how much is it going up and down relative to how much the broad market is going up and down. There might be some way to gauge volatility, to get some kind of number on it, but I think it's just easier to just eyeball it. And the other thing is, I think you just, once you have one stock, you can go back to the well on that stock every week. You can put in different multiple trades on that one stock in the same week at different strike prices. So, you know, you don't have to go through too much stock selection. Once you got a couple, I'll give you, you know, Amazon has been my main one this year. We've just been able to, my dog is sleeping and he's having a dream, making a weird noise. Yeah, so that's that. I don't know how to gauge volatility. I just like to eyeball it. And like I say, once you've got a few stocks, you can go back to the well on those. So I like Google. Last year, we almost exclusively did Google because it was in such a great trend. You could go back to that thing every week. But, you know, Google and Amazon have been my top two. And like I say, when you're looking for these, the price of the stock doesn't matter. The only thing that matters is the difference in strike prices, right? So that's what's going to determine the capital required to do the trade. If the strike prices are $2.50 difference, then it's $250 per contract. All right, Keith, really enjoys the great service every week. Most exciting point every week. Yeah, it's awesome. Now, he's got a good question here. What to find after Amazon and Google do the stock splits? Yeah, that's going to be wild when they do these stock splits. So yeah, I'm looking forward to it. I think that's going to put a little bit of pop into them, especially it's going to break it away from just the institutions, and it's going to be great. I think it's going to be great. But if it's not great, I'll find something else, right? I've had this service for 10 years and never missed a week, even with earning seasons, even with holidays, even with short weeks, 4-day weeks, weeks where the market's closed a day. Nothing's been stopping us. So we'll find something. If it isn't Amazon and Google, we'll find something. We'll always find something. Always have something to trade. There's a lot. We've done this with Netflix. We've done it with Nvidia. We've done it with Shopify. We've done it with Visa. Done it with a lot of different stuff. So the stock split won't matter, but that's going to be fun when they do split. All right. I think my time is up. I want you to go to jackcartertrading.com/WOP. Have your credit card ready and get the VIP. That's really what you're going to want to get. Or give us a call at 904-416-1776. They're standing by to help you get a username and password right now. So thank you for joining me this Saturday morning. I hope you enjoyed this presentation as much as I enjoyed making it for you. This is the single best strategy you could use in a market like this. I personally think it's the single best strategy you can use in every market, but then again, I'm biased. Yeah, you want this stuff, and you're going to love it. Peter Mott's talking about buying again, and he already has it. I love you, man. You're cracking me up. Okay, Sunita, we'll get a hold of you. We got Jeffrey, Kelly, Mike, Melissa. They're at 904-416-1776. But we're online right now. We could just go to jackcartertrading.com/WOP. Kelly's there now. Yes, Essentia. I hope it's being recorded. All right, my good people. If you don't have any more questions for me, I'm going to sign off. I love being here with you on Saturday. Hopefully we can do this again.